Chewy, ticker CHWY, is down 12% today. So what are the key levels we want to be paying attention to? So again, this is off earnings, and what was actually quite surprising with this move is, you can see we've had this massive sell-off recently, and what you saw on this stock was it was below its fair value. Its fair value is close to around $31. Normally when you see a stock trading below this value, you'll tend to see the earnings be a bit more bullish. But again, in this case, had a strong sell-off, which is not something we see every day. So it does definitely show the weakness in this company as of right now. But what are key levels, both support and resistances, we want to be paying attention to? So to quickly cover the resistances, because we do have two, it's going to be the $25.50 and the $29. Again, these are both our first deviations from both the 6 month and the 1 year to be paying attention to. Can be strong levels. Also as well, you do have that gap for around $27.50 that we could definitely be paying attention to as well. So again, they're going to be the key three resistances. So if you're a long bias trader, these can be targets, or if you want to wait for the stock to have a bit of a balance and trade the downtrend, then again, those could definitely be entries to be paying attention to. Now, what are other key levels to be paying attention to? So we do have 24.20. This will kind of be a support / resistance depending which way we go, because right now we're basically hovering around this level. So again, we need to see a bit more of a reaction before we can turn that into a support or resistance, but a level to be paying attention to nevertheless. If we push to the upside, that will turn into a support. If we get a strong push to the downside, that will turn into a resistance. So again, definitely paying attention to that 24.20. Now, if we get a further move to the downside, what are key supports? We have $20.25, and really a really nice level to trade would be this 19.30, because again, the blue lines are our second deviations. This green line is our third deviation, and third deviation between 99.7% of data should trade above that level. So if we do start coming down to that kind of low, definitely something I'm looking at trading long bias myself. And again, we'll be targeting 24.20, 25.50 will kind of be my key resistances I would be targeting off a long on these lows.